Hello, I'll be doing my speech today on the life of a commercial loan officer. The specific purpose is to inform you, the audience, that a commercial loan officer must wear many different hats and have different roles. A commercial loan officer must be a salesman, an underwriter, an analyst, a point of contact, a consultant, and a confidant. I don't think people understand the role that a commercial loan officer has on any particular small business. When financing is needed for any small business, their entire business is dissected, analyzed many times over, based on multiple ratios, and ultimately approved with the loan officer's final stamp of approval. The small business owners and the loan officer are sometimes paired for a long journey together. This can mean 1 to 5 to 10 years, even. But let's start. What do you already know about small business? Who does a small business go to when they need financing? You'd be surprised that the banks aren't always necessarily the first option for small business owners. Uh, Small business owners a lot of times use their friends, their family, or angel investors uh, first before they go to the bank. The process isn't that much different with them. However, a lot of times the bank is usually the most sensible and uh, higher recommended option for small businesses where they don't have to give up ownership or shares of the company to their investors or to their family, to their friends, etc. Many banks have different processes that people have to go through, or small businesses have to go through. However, most small town or community banks where I work uh, do indeed rely heavily on their loan officer to do all these processes. They include, but are not limited to, uh, according to ZipRecruiter, uh, the initial sales or prospecting call, gathering the financial data like tax returns, financial information, balance sheets, income statements, presenting the presentation usually in front of a board or committee. Prior to that, building the analysis and building the loan presentation, and then managing the portfolio once the loan is closed, and repeating this process multiple times over with business owners and helping them manage their day-to-day finances. Getting the first getting the first appointment can sometimes be the toughest part. There can be instances where a loan officer can reach out to the same small business for multiple years and not get any luck. The first step, though, is to decide what kind of business you are looking for and what kind of business owner you are looking for. Those questions can include what kind of industry. Is it manufacturing? Is it retail? Is it real estate? Is it medical, like dentist and veterinary? Uh, and then what is your in? How are you going to get that appointment? Do you know someone that works there? Do you know the owners? Once an appointment is made and a need is identified, a loan officer must gather the financial information on the company, at least 2 years of financial tax returns, entity documents like operating agreements, tax ID numbers, balance sheet, income statements. Uh, Many banks uh, do have different ratios and they like to lend upon different scenarios. However, there is still somewhat of an industry standard when it does come to analyzing the businesses, and that is called the 5 C's of credit. Uh, the 5 C's of credit are right here. So, 5 C's of credit. The first C is called character, and that's pretty much the lender's opinion of a borrower's general credibility and trustworthiness to pay back the loan. So, uh, what is the character of the small business owner? Uh, what's their reputation around town? Are they good on their debts? A lot of times, a personal credit score uh, can allude to these answers. Number 2C is capacity cash flow. It's the ability for the company to repay the loan based off of a net revenue. So that says basically, if I give you, Mr. or Mrs. Small Business Owner, if I give you the loan, how are you going to pay it back? Uh, is it going to be through the business itself, products and sold? Do you have a side business that supports? What are all the payment and revenue streams that are going to come in and support this loan and payment? The third is capital, which is the amount of money or investment that the business has injected into their own business's success. And this is a tough conversation to have sometimes, where you have small business owners that want financing but don't have a lot of skin in the game, and you need to make sure that the small business owner and the bank are on the same page with what that requires. Fourth one is conditions. How will the business use the loan, and how can it be affected by economic or industry factors? For instance, a retail business, a lot of sales are going to online, Amazon, online boutiques, things like that. If you're a retail store, how do you draw in business? How do you combat that online environment? And what what is the economic conditions of it? And last but not least, collateral. What are the assets that can be pledged as collateral or security if the loan were to go bad? So it's, a lot of times with commercial real estate, it's secured with a building. If there's not a building involved, then we need to look at the business's assets. What is the security collateral if the loan were to go bad? So unfortunately, as a banker, as a loan officer, you do have to consider the worst case scenario in a lot of these 5 C's of credit. After the ratios are calculated, and the loan officer must seek approval from the board or supervisors. This process can take days, weeks, depending on the bank and their internal approval processes. But once the loan is approved, the loan officer must gather final closing documents, purchase agreements, preliminary title opinions if real estate's involved, flood certificates, appraisals, final contracts, draw up the loan documents. And then after the loan is closed, the loan officer and the business owner are set for a long journey together, uh, depending on the structure of the loan. So being a commercial loan officer means that you ultimately are putting your name, your stamp of approval on somewhat of a large loan. I personally have written loans for tens of thousands, um, and for millions of dollars of loans. And honestly, the process doesn't change. I tell people I'll put in the same amount of work on a $100,000 loan as a $10 million loan. Uh, it's you just move a comma, and really you just have to look at it a lot of the same ways. But being a commercial loan officer, you must know how to manage your time, your clients, and your portfolio. And taking care of your immediate need is not always of their immediate need is not always important, but also being a consultant for future projects and growth are equally important. Thank you.